Hi, this is Raju here from Precise Trader. I welcome you into this little room of taking full advantage of precise trading zones. Okay, as I always say, please try to be as interactive as possible because I think the only way we can make the session going and make interesting is by asking questions. Okay, and do take note that the risk disclosure, this is going to be purely education and no matter what happens, as long as we stick to the rules and we stick to our limits, I think trade should come in a smooth flow. And for those of you who are new to our system, okay, basically what I would suggest is you can try it out on a demo account and see if it's effective. Then probably you may want to do it with a real account. But no matter what happens, always stick to the rules. And do take note that all in all, we have focused on about 37 crosses all in all, including spot gold. For example, like Euro USD, Pound USD, Dollar Yen, Swiss, Aussie, Canadian, New Zealand, and Sing dollars. And the theory behind our approach to the market, we use price level principle, or we call it short PLP. We are very proud to say that this is something which we have, is an invention which we have done, and we have been working on this market almost like, I've been in the business almost like 15 years, and that's how we use it to take our trade. And for those of you who want to know how these levels are derived or how the zones are derived, it's basically we use Fibonacci numbers, Andrews Fishrock, moving averages, trend channels, and Gann numbers. I know majority of you use any one of these tools because I think without using any one of these tools, you can't become a technical trader. So, and also the accuracy of using that tool will all depends on which level you use to take your projections. Like for example, excuse me, if you take Fibonacci numbers, okay, you just bring in a dozen experts of Fibonacci and ask them, what is the particular level you expect the market to reverse. All the all the experts will be coming with different answers, but eventually, because the way which we use, that's what makes the difference, and that's what makes the accuracy of that the tools which we are going to use. Okay, now let me show you the screen. Okay, this today is a special day because you must understand that today is the first trading day of the month and the last trading day of the week. So as a result, we have to be extra careful. That's what I wish to tell you. And the markets are trading with new highs and new lows. So I mean, eventually we have to wait for the market to give us a signal of a reverse before we really take in the trade and let your money work. So let's see what are the calendar of events that is to be out. Uh, we have a couple of data out from the US. We have core personal consumption expenditure, personal income month on month, and I think a couple of data. So as a result, the market is expected to be quiet until the data announcement. So after the data is out, then you may see a lot of activities, or you see the market moving, right? So let's do the session together, and I'll just see is there any viable trade set up. Then after that, we can look into the questions to look for a trade, or we can discuss the question. Okay, right now, if you look at this today's session, okay, let's say we look at the barometer. This is the barometer which we use to take our trading decisions, and this is one way helps us to decide which strength against the weakness or against all the crosses. And we do not use any indicators or oscillators to get all this the parameters work. So basically, this is the strength and weakness against the other crosses. And together with this, if you use the indicators and oscillators, then your success rate is quite high, and chances of you being stopped out or being the wrong side of the market is quite slim. So looking at this, Let's assume, I mean, this is the daily strongest and weakest for the day, the barometer. In fact, the weakest cross is being the USD. All the dollar is making new highs and new lows against all the crosses. And the strongest cross is being for the today is pound, followed by the euro. And the next weakest is Canadian dollars. Okay, the good and bad about this barometer is if the market is trading in a range trading, you do not get a alert or you do not get a signal. So to overcome that, that's why we need to look at the report to make use of the report and use it and decide whether the market has already moved out or whether the breakout has already happened or not yet. So let's say we look at a 6 hour chart or 6 hour time frame. So when you look at this, the pound is being still the strongest against most of the crosses, followed by the yen. So when we do, excuse me, when we do, when we take our trade based on this barometer, so this one dictates the validity of our entry. Okay. What do I mean by the validity of the entry? Okay. I remember that previously I said if you want to be trade with ease, that means if you want to trade the market without emotion controlling you, all you need to do is you need to answer five questions, five simple questions before you take a trade. Basically, the five questions, uh, if you recall, the five questions are the trend directions, and of course, that's the most important question. And based on the trend directions, you decide whether you want to be a buyer or seller. Then the third question would be your stop loss. Fourth question would be your price target. And fifth question is the validity of your trade or expiry of the trade, meaning how long do you plan to hold the trade. How you should be doing or how we approach the market is, okay, let's say we take a trade with the entry, exit, and stop loss. Okay, all the three levels having in mind, and with the expiry date. So whichever comes first. That means if our price target is hit, then we'll book your profit within that time frame, or otherwise we have to reassess the market and if you plan to hold your trade, or we close the price at whatever the price is trading towards the end of the time belt or to the end of the expiry. So that's how we look at the market. So let's say we look at, excuse me, pound or dollar yen, because this is being uh, the cross right now to trade. And in fact, the daily was euro. Just now maybe we look at euro because the pound has been still trading in a range. So I feel, it's still in a, it still has not given us a clear break. So probably we look at euro. That would be a better option to trade or a better market to look at. So let's look at the report. Just give me a minute. Okay. I hope you can see my screen. Give me a minute. Okay, can you all see the screen? Okay, if you look at euro, in fact, what we give or we mention all the three time frames which we look at on the trend directions, because remember I said the trend directions is the most important question to look at to to take your trading decisions. So if you look at on the hourly it says turning down while 138.65 holds. That means whatever the levels which we mentioned, you have to use a variance of plus minus between 3 to 5 pips as a variance, because different brokerage firm will use a different spread. So basically what it's telling you is, if you look at the daily, it says, excuse me, it says a limited up while 133.85 holds. When you say limited up, that means the upside is going to be limited. And on the hourly, it says turning down. So when we say turning down and limited up, that means what we expect is probably towards the end of today, the market may close or have a pullback towards the close. That may be one possibility what we are expecting. So the only thing is, if you are a bullish or if you are a buyer, we have to be extra careful because the market is expected to reverse. And on the other hand, if you are a seller, this is not the time to sell, because the market is approaching critical levels, so we can expect a reverse soon, but it is not as given us a confirmation of a reverse, so we have to wait for the market to give us the confirmation. So looking at this, so it says turning down at 138.65. So basically, how we look at our report and use it is, okay, this is, we have a set of 12 resistance numbers and we have a set of 12 support numbers, and you should be imagining all these levels as staircase to the price. Okay, basically it means how it moves. When the price moves up, it moves up from one step to another step, and that's how the price moves. And our entry is triggered most of the time when the price breaks our resistance zone 1 or resistance zone 2, to be more uh, precise. And the same thing goes if the break of support zone 1 or support zone 2. That means, in simple, you can be a buyer at the break of 137.55 or even 137.75, provided if the trend is up. And on the other hand, you can also be a buyer near the support zone 1, because that would be the least risk with the most reward, because you are buying on dips, and that would be a trade, a good trade to set up, provided if the trend is up or sideways up. So if the trend is down or turning down or sideways down, then we can look to sell near the resistance zone 1 or resistance zone 2, or sell at the break of 136.85 or 136.65, and that's how you use our trade, I mean our zones, to take our trade. So let's assume on this particular scenario, okay, we felt that the market is going to turn down near 138.65, and right now the market is trading at 137.30, which is within the no man's zone, we call it. When the price is trading within our support zone 1 or resistance zone 1, we call it a no man's zone area, and you can expect a lot of choppiness or noisy trading during this time, or during this place where it's caught, right? So let's assume we are planning. So if, let's say, if the price breaks 137.55 or 137.75, then you can be a buyer, but we have to have a cautious approach, because the market is in a final phase of making a reverse, or making a turn. On the other hand, you may want to wait for the price to see. And one more condition is, usually the day high or the day low would happen within our resistance zone 2 or support zone 2. In other words, if the high for the day is within 137.75 and the price close, or the price breaks 136.85 or 136.65, then we can safely say that the market has reversed early prior reaching to this level. If not, then we have to wait for the price to move higher, and wait for the market to reverse or go short near that 138.65. So that would be our trade strategy, and that would be our approach on this market. So this, whatever I'm doing, this is all done based on the trading zone. Then our decision would be eventually by looking at the chart and taking a trade, and that's how we take a trade. Let's assume if the price breaks 137.55 or 137.75, how high can it go? Okay, we have another resistance target 3, which is 138.30, right? So that would be one barrier. The next barrier would be, of course, 138.65. If it really breaks that level, then the next level would be zone 7, which is 139.05, and max you can see, which is 139.40. So these are the levels we use to take, and we have to wait for the market to give us an answer to our trading decision. Okay, let's look at the chart and see how can we trade, or where can we put our stop loss based on the levels. Okay, let me highlight. So coming to this chart, let's say we look at a weekly. Okay, if you look at a weekly chart, it is trading well above the open, right? So if you are bearish or if you are seller, we have to wait until the market really reverses, right? So we have to wait. Then what are the signals which we look at? Okay, maybe I can share with you later on to see, when do we know that market has reversed, or when we would really get a confirmation whether the market has reversed or the high has already been seen. I would show you on this particular market. So now we look at on the daily. Excuse me. The daily is trading well above the open, and it is a new high, and it's a multi-week high. All right, but we have to be extra careful because, as I told you, the price is approaching a critical level or our price target. All right, so that is the thing we need to take note on that. And let's say we look at a 6-hour chart. Okay, the 6-hour chart basically is telling you that it's trading well above the open, and it's having a pullback. It registered a high of 137.60 and having a pullback now. So it is still too soon for us to conclude our reverse. And also we still have another 2 hours. Let me see. It's about 2 hours and 45 minutes. Is it 3 hours? Yeah, 3 hours and 45 minutes left on this candle. So we have ample time. So we have to wait for this candle to really finish, and then only we can close. Then only we can come to a conclusion whether the market has reversed or not yet. So let's say we look at a 2-hour chart. A 2-hour chart, the previous candle it had a pullback, and right now this candle is still trading above the open. So we can't conclude that it's made a reverse. So we still have to wait. So let's say we look at 5 minutes. See, this is how we do, because basically when you zoom in from a higher time frame to a lower time frame, you can see it's crystal clear, meaning in the sense you have a bird's eye view of the market and see how well this market is moving. Then finally you can come to a conclusion whether you're going to buy at the valley or sell at the peak to stick to the trend directions, right? So let's say we look at this. It is not as given us, it's not given us a signal of a reverse. So we still have to wait. And let's say I draw a channel. Let's assume I draw a channel to see how high this price can go, or how far this price can really go. In fact, 38.30. That is our price target for this move. So if you see 38.30, 38.65, more or less, that would be giving you a signal of a reverse or a signal of a turn. So we have to wait. So now how can we trade, or how can we look at the market? One way is, since this market is coming down, we can look to still look for buy on dips, because right now the market has not reversed yet, but with the cautious. So when we say cautious, is how can we trade the market? One way is either you can reduce your contract size. Okay, that means let's say your normal contract size is, let's say, 50,000. Okay, then what you can do is probably you take 25,000 or reduce half your contract size to really to take the trade, because the price is approaching critical level. So where can we buy? Okay, in fact, we have a Europe support zone area, resistance zone 1, which is 136.70. Okay, that means 136.90 or 136.70. That's where I would want to look for a retracement down to go for a buy. Okay, let me give you a trading tip based on this, and you may want to try it out on a demo account, right? To see this for yourself, see whether this trade setup works. And also remember that uh, thing is all about probability. Okay, that means like as long as you have a proper money management and you have your risk reward, and if you do it consistently, okay, you shouldn't be losing money in the long run. The only trouble comes in, when you do not have a proper money management and you do not know when to go with your full lot size or reduce your contract size, that kind of stuff. That's where, you get yourself being losing, and especially if you do not practice putting stop losses, then it can be even more dangerous. Is there anyone in this room who trade the market without putting stop losses? Okay, let me tell you. I mean, maybe you want to give me an answer. Just give me yes and no. At least I know how whether you are with me, right? So from experience, I'm telling you. I know some of you do not use stop losses or do not use stop losses of 50 pips or 70 pips. But what I would suggest is from experience, if you do not practice putting stop loss, at least you can put few hundred pips away. At least 100, 200. At least you can sleep in peace when you are not watching the market. And nowadays, you must remember that the market can be overnight. You can just reverse 100 pips, 200 pips, and your winning position can be losing within the day. I do not know how many of you have come across that kind of scenario, right? So it is best to do a stop loss at least quite far away. So at least rather than without stop loss, it can be quite dangerous. Like for example, like 2 weeks back, I think it was last week, when the BOJ intervened, for the yen. If let's say you took a trade without stop loss, of course, the market has come back, and right now it's trading at the point where they intervene. But what happens, if the market is really, I mean, if the BOJ was successful in intervening and really pushed up, so it can be quite dangerous, especially when you trade the market without stop loss. This is my just a humble request, but just take note on this. Anyway, coming back to this, we may want to do a limit buy and near 136.90, okay, and call yourself, if you are a conservative trader, then what I would suggest is you may want to enter at 136.70, 75. That means another 15 pips lower. But if you're an aggressive trader, then probably you can take the trade at this level and you put a 40 pips stop loss, and you can put about easily about 50 pips or more to get a move on this market. As long as you exit before the registered high, because today the registered high is 137.60. I think you should be safe, unless if the price breaks the high, then you can expect the price to see 138 138.30 or 38.65 level. It all depends how is the data announcement coming in from the US, then again from the stock market, and all this makes a key role in the decision. So this is something which I wish to tell you, and this is the trade setup which I feel is worth considering. But again, as I told you, just bear in mind that today is a special day because today is the first trading day of the month and last trading day of the week. So we have two different time frames coming into play. So we have to be extra careful, and also remember that we should be always trading the market and not our forecast or not our expectation, right? In fact, the price has reached our levels. Maybe I can just show you maybe later on. Maybe let's look at the question. Then if I have the time, then I'll show you what we did last week and how the market really responded. Okay, let's look at the question. To what level do you see gold reversing to allow for an entry point? Okay, let's look at gold. Let me show you the chart. Okay. Gold is in a similar manner. okay, is approaching critical levels as like the euro. In fact, gold, we are expecting the market to reverse near 132. Just give me a minute. Let me look at that report. We believe that the high should not go below, above 1324.50 or max 1335. So these are the two levels whereby we are looking for this market to reverse. And on the other hand, if the price, the registered high is 1317. Okay, let's say we look at the chart. I hope you can see the chart. Okay, you can see the chart, right? So we look at this on the weekly, right? It's trading well above the high, and it's a multi-year high. So you must understand that. Let's say we look at a yearly chart. Okay, this is the price has not reached this level any time before. In fact, the last time the registered high was in 80. That's where the price hit, which was 850. So right now it's hitting new high. So if you are holding shorts, okay, my humble request is be extra careful, because we would not know where is the top unless the market start to reverse. Till then, we have to wait for the market to reverse. So we look at this weekly. Okay, it's also trading on the new high. And let's say we look at on the daily. Okay, let's say we do a projection based on the daily. Okay, let's assume I do a projection and see. But even though it's overbought, right? Even though it's overbought, excuse me, you can see the price, in fact, breached all our price target, and we have another. The next price target would be 1380. That is quite far. Okay, let me see whether I can do a projection much more nearer. Okay, let's say we look at a 4-hour chart. Okay, looking at this 4-hour chart, in fact, it has reached almost our price. On the 4-hour chart, it is reached a critical resistance, right? So, and if I do Fibonacci, also we have, remember early on I said about 1224 half or 1336. Okay, so I think we have the next level, which is 1331, which is a Fibonacci level. So we have to closely watch the market, and if you see any one of this level, then probably you may want to take in a trade. But right now, no confirmation of a reverse, and it's making new highs. So we have to stay sideline and watch the market until the market really gives us a turning point. Okay, so that's our view on gold. For GU and Euro USD, how low could they get in coming days? See, we can only project the lows after the high has already been seen, because you must understand that if the high goes higher and higher, that means, let's assume, because of course we are expecting this euro to reverse at 138.30, 138.65 or 139 139.20 or 40 level, if you recall. So excuse me, the higher it goes, then only we can project the low. So we have to wait for the market to reverse, then only we can project. And there's no point of us doing a projection for the low until we see the high. Okay, so that's the thing. Since we have already discussed this market, let's look at pound USD. Okay, pound USD, it has been caught in a range for this whole week. In fact, yesterday it tried to break the previous trading range, but had a pullback, In fact, today we were bearish, but unfortunately, it's starting to move the other direction. So we have to be again extra careful on this. So what we believe on this market is we have to see whether the market breaks that 15905. If it really breaks, then you may see the price testing the previous swing high, which is 160, right? So the levels which we want to pay attention is once it breaks this high, probably we may see 15965 or even 160 figure. And if it even breaks, then the next level is 160, 60. These are the three levels we want to pay attention. So overall is we have to be also quite careful because this is which trading. See, because the other one, euro, is trading new highs. This is pound is a bit weaker than euro because it's trading within the prior swing high. So we have to be careful on this market compared to euro. So that is for pound. When at the next question is when at 139.40, how low could euro retrace? I think I've already answered that question. The 136.70 is that retracement for today. I I told you, yeah, that is because this is going to be a day trading, because this is not 136 because right now it's 137.30. So basically we are looking on a 5-minute chart. So what we expect is it's going to retrace near 136, 70 or 90 level, where the previous high is, and that's where we can expect the market to hold, and we can see the price trying to test the high one last time before the market really reverses. So that is for today. Could you repeat the entry for gold? Gold, I think I did tell you, if you are a seller, we have to be patient because the market has not reversed yet. Okay, let's say we do on a lower time frame. Once it breaks that 117.50, you should easily, you see the next price target is 1327, 1322. Okay, I repeat, 1322, 1327, or max about 1336, 1338 level, then only you can expect the price to reverse on gold, right? Okay, your view on pound, I think I already told you, because we have to be quite, see, whenever the market is trading within, let's say I show you the chart. See, whenever the market is trading within a range, for example, on this particular moment, see, the best thing to do is trade within the bands or within the channel. Of course, if it breaks that 159.40, 159.25, 159.40, then you can expect the price to move higher. Early on I said 160 and 160.60 are the levels where we expect the market to reverse. So what we want to do is, we may want, if you feel, the market really pulls back, then probably you can go for a buy. But we have to take note that compared to euro, pound is not a good cross to trade at the moment because it's still caught in a range, between this channel. So that's what we say, we have to be a bit careful. Right? Any other questions or any other market you want to discuss? Feel free to ask. Then, anyone trade crosses? While we are waiting, maybe I can show you one thing. See, this is a report which we do once a week, and this report now we're also planning to give it to FX Street. clients. So in fact, last week this was posted on 25th September, right? Uh, 25th September, which was posted at 3 GMT. What we said on euro last week, September 25th, was we conclude that euro USD may be strong until the end of the month and any pullback should be limited. And the bulls were holding till the close, which signifies strength. And the bulls must ensure that they protect 133.70 and 132.80 levels to keep the momentum going. Okay, the price should not close below 132.45 or 131.50 levels on the daily basis to keep this uptrend intact. And the bulls may struggle near 135.80, 136.25, 136.40. These are the levels where we feel that the bulls are going to struggle to clear. And the ideal price target for this uptrend is 138.30 and 142.30 levels. But pay attention to 135.40, 36.25, 38, 39 and 140.20 levels. These are the levels which we we are telling you to pay attention to. So the euro is strong against all the crosses, and another factor to be considered. Accuracy of the long term may deviate. Okay. So basically, if you look at this, if you look at euro USD, which we said on the 25th, this is where we posted. Okay, this is where we posted the report. Okay, so in fact the market had a pullback, and the low it went was 133.80. If you recall, I think 133.70 is where we said that was the first pullback we are expecting. So then after that, the market really went up, and the market was struggling at 136, between 136.40. You remember that 136.40 and 135.80. These are the levels the market was struggling. Then it had a pullback, and right now it's trading. So this is something which on a bigger view, if you feel if you are a short-term trader, then which might help you to take your trading decision. The question is, do you look at fundamentals as well, or just technical trader? Okay, I am purely a technical trader. I do not look at fundamental news, but somehow or rather, because what I feel is, because fundamentals and technicals should go together most of the time, but sometimes you can't reason. Like, even though there was some bad data out from the eurozone, yet the euro was making new highs. So sometimes it is very hard to justify, or very hard to reason the trade between the technicals and fundamentals. The question is Aussie Canadian. Are you looking at across Aussie Canadian, or Aussie US, or Canadian US separately? Okay. If you if you look at Aussie Canadian, in fact, it has breached the prior high, okay, which is 99.20, and is trading above that high. All right. So let's see what is our report for Aussie Canadian. Let me just give me a minute. So this Aussie Canadian, basically the daily trend is limited up, and the hourly trend is also limited up. So basically what it's telling you is, you see, it has been long all the way up since June. you know, August, September, it's about 3 months it has been in the up move. So basically it's due for a correction or pullback, that's what we believe on this. Let's say we do on a 4 hour chart. Okay, I think that was that was your question, all right? Give me a minute. Let the chart load. Just bear with me. The chart is takes. Okay, looking at this pattern. Okay, looking at this pattern and this move. Okay, it's still loading. Huh? Okay, what is the price target I'm expecting is, uh, in fact, the first price target more or less is already met. Let me see whether we can draw a channel. Okay, basically, what I feel on this is it may, if you ask me my view, okay, it may have stopped, okay, that we wouldn't know. But we have to wait for the price to see whether it's breaking this high, which is 10025. If it doesn't break this high and if it breaks the low, which is 9910, then we can safely say that the market has reversed early. Otherwise, we have to wait for to see, and we have to see whether the price is going to move up. Okay, let's say we look at Aussie and Canadian dollars separately. Okay, the Aussie is also looks in a similar pattern, and if you look at this, so this Aussie US is exhibiting because Aussie is dragging the Aussie Canadian up. So we have a dollar can which is caught in a range, and Aussie is dragging the Aussie Canadian. So in other words, if you see the Aussie breaking turning reversing below 96.25, then we can we can safely say that Aussie Canadian has reversed or or made a reverse. Till then, we have to patiently wait and see. So what I would suggest is we have to wait and see whether the market really breaks this high, which is 10025. If it doesn't, if it breaks this low, then we can safely conclude that it has reversed and we can look for a retracement. So this is my view on Aussie US. 4 hour is showing a head and shoulders. Okay, let me see. Yeah, so if you look at on the 1 hour chart, okay, probably this is what it looks, right? So the price has to break that 90, 99.10 or 98.90, then you can see at least about 100 pips move. So so this is the thing you need to take note on that. Uh, the next question is, could you repeat slowly the entry points to buy gold? How long could it retrace to? Okay, buy gold. What I would suggest is, if you are looking, see, because uh, basically we are trading in a very critical level. Okay, what I would suggest, two way is, one is either you just stay sideline for a reverse to go for a short on gold, or because if you're buying at this, we have to be very tight stop. Okay, that means what I would suggest is if you are looking to buy, let me see the report. If you're looking to buy anywhere near 1039, okay, 1039 or 1037 would be the level for you to consider to go long. But again, we have to put with the very tight stop, and especially nowadays, gold has been so wild, especially if you do a tight stop, chances are you may be just stopped out and the market moves. So what I would suggest is you wait for the break. Maybe the break of 11750 might give you another 8 to 10 points. Okay, at least uh, between 5 to 10 points. That's what I feel on that. Otherwise, if you're trading on pullback, okay, you try to buy near uh, 131150 or 1308. These are the two levels I would look for to take your trade or entry. That's what these are the levels I feel I'm comfortable with. Okay. uh, the last question, excuse me. Should be watching gold when we trade Aussie, Canadian. See, it would be good, honestly, but but nowadays you must understand that trading is not it's no more a easy game like 10 years, 15 years ago. Because 10, 15 years ago, uh, usually all the crosses would move in one manner, meaning in the sense, like for example, when the dollar is weak, it would be weak against the Swissy, Euro, yen, Aussie, Canadian, so on and so forth. But nowadays, every day we got different strength and weakness happening between the crosses. So as a result, it's best for you to do your work on a particular chart and stick to your rules rather than I mean, we can use that as a guideline, but 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 we can't really strictly stick to that rules. All right. Yeah, I mean, this is I'm looking to if you are looking to long 1310 and 130708 would be a entry level, and your stop loss should be below at least 1301. That's again I told you end of the month, sorry, beginning of the month, last trading day of the week. Have all this in mind, then you take a trade. Okay. Okay. Once again, thank you very much. I think it's been a good good session, but I apologize on because honestly I couldn't speak well, right, because of the bad sore throat and flu, right. So once again, I take this opportunity to thank FX Street for organizing this wonderful event, and I would like to thank you for coming into this room and look to see you again next week. And we also have our in-house webinar, which is every Wednesday. Okay, it's also free, right? Thank you for your concern, and have a great weekend. And looking forward to see you again. Till then, goodbye. Thank you and bye.